Good evening, good afternoon, good morning, or whenever it is that you see this fantastic episode. I'm Jonathan Bangley here, host of Naked Tax Talk, where babies, we get naked. Well, we bear down to the naked truth about our personal lives, our money lives, business lives. I already messed up my introduction, but that's okay. Let's start all over again, shall we? Hello out there. I'm Jonathan Bangle here, host of Naked Tax Talk, where we come down to bear down to the naked truth about your personal life, your business life, and of course, your monetary lives. Why? Because we know that when we start addressing our personal selves and improve upon the personal self, the business, which is a reflection of who we are, only increases and gets better. And guess what? The money is a reflection of the business and of the self. I'm brought to you today by a company called JB Financial, a place where you can go get your taxes done and, of course, your proactive tax planning completed as well. I'm super excited to bring on a really good friend, also a very amazing business owner himself, and somebody that works in an industry that every single one of you has to eventually come to terms with, and that is your mortgage. The ability to qualify so that you can borrow the money so that you can either maybe go invest in property, become a badass real estate investor, or maybe you just simply need a house to buy into and live in. So with that, today we're going to talk about the catch-22, the problem that small business owners face when they try to go get a loan. And Curtis of Clarke Capital is going to get on here right now, and he's going to talk to us about some of these issues that come up for us as the self-employed individuals, and some of us that have other entity types, the struggles that we go through because it's real, and how him and I work together to make sure that you can qualify for the loan that you're looking to get. By the way, this is an interactive stream right now. If you're watching this live, feel free to say hello. Feel free to leave your comments as we go through. You guys know the drill. We're just going to have a chill situation. We're going to chit chat, talk a little bit, and get some answers to our burning, yearning questions. So without much further ado, please welcome Curtis Clarke. Curtis, welcome to Naked Tax Talk.
Oh, man, I'm so excited to be here, Jonathan. Thanks for having me.
Thank you so much. You know, you're so cute that I had to put a pixelated filter on you. I'm just saying.
Is that right? I need to upgrade my camera then. This is what's
Curtis, share a little bit about who you are and what do you do and what got you into working with mortgages, in particular with those who are self-employed.
Yeah, thanks for the question, Jonathan. But I got into mortgages about 10 years ago and kind of found my niche in kind of specializing and providing expertise for kind of more complex income calculations. Really just helping those people like myself who are business owners, who are filing Schedule C's and have 1099s or maybe an S Corp with an 1120S, something like that. I've been able to carve a niche for myself, helping those clients by knowing exactly how to file those, and complete their applications properly. So, yeah, it's been good. It's been good for me. So,
what kind of, tell me a little bit about, like, how did you get involved in mortgages? Because I don't know if everyone just wakes up and goes, I'm going to become a mortgage broker. Like, what's your story?
Yeah, I don't think I ever at one point woke up and said, man, I can't wait to do mortgages, right? Like, that's not something you dream about as a kid. But, I had some friends and family in real estate. And back in 2006, before the housing bubble and that we all went through, I had gotten into mortgages around that time. Wasn't sure if I should go to school or not. So I said, hey, let me try my luck at working. And so I did mortgages for a few years. And then obviously the real estate bubble happened and we kind of all got displaced in the industry and we kind of had to find different things to do. So I went back to school, graduated from school, and then shortly after went back to doing mortgages. And I've been doing it ever since.
And you actually became a badass CEO of your own because you actually went out on your own and started your own brokerage firm, so to speak, right?
That's right. So I worked in mortgage banking with several different banks for maybe 5 or 6 years. And then about 2, 3 years ago, I started my own brokerage, which really just allowed me to kind of explore a lot of the entrepreneurial, ambitions that I had. And, I think you could probably relate to this too, Jonathan. It's like, it's something very personal, your business, your brand. And, I have a very, very high level of expectations for myself and for my business, for the level of service that we provide. And that's something that was very, obviously in financial services and banking, sometimes you don't get the service, that should be there. And I felt like that was a great opportunity for me to start my brokerage and really care about the client and try to figure out what best serves them. And it's been working out. It's been working out.
So I have to ask. So, because you said I want to offer like the best experience, right? And you and I both know, because for the record, we've done business together, either personally, me utilizing you to refinance my mortgages twice. And not only that, though, but working with mutual clients that we have that are investors and stuff like that. What is the number one issue that you find when you're dealing with somebody who's self-employed and they're trying to get money so they can buy a home?
Yeah, that's I would say that the number one thing is that people tend to, especially if they're business owners, they're going to tend to maybe not claim as much income as, they actually probably make, something like that. That's probably the number one thing, is that, you have these business owners that are, smaller. It could be small business or even large business. But you could have these people that are grossing maybe 1 to 200,000, and then you get their tax returns and they said that they only made $20,000 for the year. And so you have these people that are making lots of income, but when it comes to their taxes, they're not sure where to put the income, and consequently, I see it all the time with tax preparers that don't work closely with a mortgage person. I can't tell you how many mistakes that I come across, and why this is in this box and why this is in this box, happens all the times. And then when these business owners come to me, I'm saying, I'm sorry, I can't help you. You're gonna have to wait till next year until you can correct these returns.
And that's interesting, because really what's happening is when when the taxpayer, right, the entrepreneur, it's a double-edged sword. This is the catch-22, right? It's the double-edged sword. Because on one side of the blade, you need them to have the income to prove that they can pay back this mortgage, right? Like the mortgagers, right? They have a vested interest to make sure your ass can pay up, right? I mean, that's the risk they're taking. Mm-hmm. And then this other side of the blade, however, is the tax side of it, which is, well, yeah, if we have a lot of income, I'm going to have a lot of taxes. But it turns out there's actually ways in which you can do both. You can win-win, right? You can show you have a lot of income, and you can also still mitigate the taxes on that income.
That's absolutely right. Yeah, that's absolutely right. And that's where an ounce of knowledge will save you a ton of money, right? It's that's what's going to happen. And so, I mean, if I can't recommend enough for business owners, if you are self-employed, you really need to get in talks with your accountant. And if you're going to be buying property, you really need to sit down with a mortgage person to work together, so that we could all work together to help you obtain the goal that you're ultimately looking for.
I can imagine you run into the same problem that I run into, which is reactionary, which is after the fact, mm-hmm. right? It's kind of like throughout the year, people don't really think about their taxes because they're afraid to talk about their taxes. They don't even know what their numbers are. They're like, I think I have money in the bank. So they're afraid to address those issues, which causes big tax problems for them at the end of the year. So what happens, they come into the office and they go, help me save money. And then you're like, I am so sorry, but it's illegal for me to help you to plan to outsmart the system because the year's already over. Right? So it's after the fact. So then you prepare this tax return based on this data that happened past when, and then they go to you, Curtis, I need to borrow money. And then you're like, you're kind of out of luck. But you and me are the same in the sense that if they were to they don't even know this. I bet you they don't even know this, Curtis, that they can proactively work with you and me
Mhm.
to A, mitigate the tax in advance, but B, if again, like you said, if you're an investor or you're going to buy your first home or you're going to go refinance, to start proactively working with you in advance before they come to you going, I need money.
Wow, man, that would be a great, that would be like a load off of all the work that we have to do when they come to us in a reactionary way. And yeah, and if they can get a jump on, no, I think again it goes back to just knowing what they need to do. But I don't know, John. Let me ask you. I mean, would you say that the majority of your clients, do they come to you and say, "Hey, I want to be a part of this," or do they say, "Hey, Jonathan, I got this problem," and they just hand it to you? And
Yeah. So unfortunately, a lot of business owners will come to me because they're already in pain. The pain that they're facing right now is perfect time. It's February 2021, right? This is the day this is being aired right now, February the 4th, 2021. They come to me now because the problem or the perceived problem is I've got a tax bill that I know is waiting for me. And unfortunately, what they don't realize is that there's nothing I can really do for you other than to buy my book, The ABCs of Deductions, An Entrepreneur's Guide to Tax Write-Offs, which is now available on paperback. This month, we started launching it on paperback. So now you can go buy it. It's $12 and some change on Amazon.com. Type in ABCs of Deductions. But the only thing I can tell you is go read my book and apply those principles to help you to think about those types of expenses you might have incurred throughout the year. But that's not planning, right? It's kind of like with you. Like we both know that in your case, when do they come to you, for example? Like when are they coming into your office to help to qualify for money?
definitely, they're expecting to get the refinance done or to qualify for their new house. They're expecting that within like 30 days, right?
And how long does it actually take when their shit's a mess?
Oh man, I mean, obviously it depends on how complex the business owner is. But if I mean, they might have to wait. Like if they didn't take the time to sit down and consult with the professional, I mean, they might have to wait a whole nother year before they could buy a place.
Wow. So by being reactionary, again, both of us same way, by being reactionary, for them, I got to delay buying that beautiful home that I really wanted for a year. And
Yeah,
it's true with us too. Oh man, instead of being able to take the vacation to the Bahamas because I got to pay Uncle Sam, I got to wait until I make up the money a year later. That's this it's the same thing, isn't it?
yeah, yep. It's gonna. I mean, people are, I think, leaving a lot of opportunity and a lot of money out there. Um, Again, just taking the time to schedule something with a professional is going to put them on the right track. And like you had mentioned and touched on before, Jonathan, you said something about, there's a proper way to report your income that it still allows you to qualify for a mortgage and still reduces your tax liability. And if you're not doing that, then I don't know what you're doing. Like you really need to reach out.
You know, it's interesting you say that because we'll get to the illusion of what we're talking about, and the illusion is we're talking about the entity choice. We're talking about the entity here, and that's the honest truth. So, by the way, in my course, Rapid Tax Savings Formula, cheap plugs all day long. But in my course, Rapid Tax Savings Formula, which we're doing live again starting this Monday, February the 8th at 6 p.m. Mountain Standard Time. Tickets are still available for sale. We talk about the entity choice. And I often will say the entity choice determines what types of things we can do, what kind of deductions we can take, what kind of actions we can take. And I never really thought about it till right now, Curtis, with you. But the entity choice is so important just as much as when I want to go work with you as a mortgage broker.
Hmm.
Because correct me if I'm wrong, I know you're the expert here, but correct me if I'm wrong. If I'm a Schedule C filer on a 1040, so I'm going to get technical, right? So that I'm talking to you, the sole proprietor, the ones that like to have unprotected sex. I'm talking to you, the limited liability company owners that are single, right? That are having limited types. You're having dental dam sex, right? A little bit of protection there, right? You're still filing on the same schedule, a Schedule C 1040. And in rapid tax savings formula, we talk about how Uncle Sam's actually are prude when dealing with those entity choices. In that particular case, Curtis, there isn't a whole lot you can do if they're showing a lot of losses, or they're not, as you said earlier, not disclosing all that income that they really did earn. That kind of puts you in a bind.
Mm-hmm.
Right? Now, however, if I decide to practice safe sex and use a condom, or also known as a corporation, right? And I go to you, Curtis, and I'm like, Curtis, I want to qualify so I can buy a house. You can say, oh, I see you have a corporation and I see you pay yourself wages, which is not required by law. I see you're paying wages. You get to kind of now decide which one you want to look at for income qualification purposes, but that helps, right? Knowing, having that type of separation.
Oh yeah, yeah. I mean, the corporation entities have more flexibilities in what incomes we can use for their qualification. And you know, the entity choice obviously is like, I think it comes down to, you know, if it comes down to, I think the clients need to know that they can still get the tax savings. And I think listening to a professional's advice, particularly an accountant's advice on how to set up the entity, and then consulting with the mortgage broker, I think it can pretty much solve both of the problems as far as tax liability and qualifying for the mortgage.
That's the magic sauce we're talking about.
Yeah.
That's the magic sauce we're talking about. Curtis, I have a silly question. If I want to, let's say I want to buy a home. So we live in Phoenix. I live in Phoenix. I think you travel between two states. I know, Curtis, we're friends. But in Phoenix, now the average home is about $200,000+ right now. Is what like a small, like my house, which is in a working class neighborhood. I would call it the blue collar working hood with all the. I actually live in a neighborhood with all of like the gardeners and all the cleaning people. Like that's my neighborhood, right? Like that's fine by me. And I did that on purpose, as you know, because you just refinanced my mortgage, and I only pay like $612 a month for my house. Which, you know what, I had the philosophy of, which kind of reminds me of another subject, which is living within our means. But I had the philosophy that if I, for whatever reason, lost my ability to work, I still wanted to have a house over my head. And I figured at that time, I figured $800-900 a month was an easy nut to crack. And so hence why I bought a cheaper home, right? But if I wanted to buy a cheaper home, again, Arizona average price is about for blue collar working neighborhoods about 200,000 ish. What's the typical income that one has to reach to qualify? And I know that there's technical stuff here, so we're going to disclose this by saying limitations do apply. So whatever we say right now, you cannot count on as advice. So with that, in general terms, what does someone have to typically earn to qualify for something like 200,000?
Yeah, I like that question. So yeah, 200,000, you know, it's going to be your typical single family residence, maybe a 3-bed, 2-bath type scenario. First, you know, entry level type home for 200,000. So let's see. Obviously, it depends on like how much you're going to borrow, you know, and
let's go. We'll make it easy for you. Ready? Let's throw out all the technicalities. And throw out all of the assumptions, and it will, again, in generality, they're going to borrow like a classic American's going to probably put down 3%, let's just say, or whatever, right? But let's just say $200,000 is what I'm trying to qualify for.
I got you. I understand. I would say generally, you would need to earn about $35,000 to $40,000 a year, and you would need very little to no debt.
Okay, perfect. So right. So this is the truth, right? Like our industry in taxation, in mortgages, right? The truth is that I asked you a loaded question, right? It was loaded. And I get asked these loaded questions too, right? We call them quick questions, but what they're really disguised as loaded questions.
Mhm.
And the truth is the same thing. Someone comes in and goes, "Well, when should I become an S corporation?" There are so many variables that you have to consider before you make the leap into an S corporation, right? There's just a lot, right?
Mhm.
But generally speaking, we can say that's typically a good entity choice for most tax purposes, right? But
Mhm.
again, so I love that because you said, look, you want to qualify for a $200,000 home. We're not going to take into account all the other stuff that goes into qualifying you, all right? But at a very minimum base, you got to make at least $40,000. Well, let's talk about that real fast. If I'm self-employed,
Mhm.
aka I'm filing a Schedule C, again, I'm talking to you, to my solopreneurs and to my single member LLC members, right? If I'm self-employed, filing a Schedule C, that means that my net income, the end result, needs to be $40,000. Well, goodness gracious, that's a tax bill. Let me do my math. I play one. I play an accountant, so I got my little 10 key right here. This
Oh,
reminds me of Willy Wonka, the original. Okay, I'm an originalist. Reminds me of Willy Wonka. I am now going to ask the calculator how much taxes is someone going to pay on $40,000 on self-employed income. He is now, I'm punching it in right now. I am asking the computer right now, how much is it going to be? And the computer's telling me right now, at a very minimum, the mandatory tax on net profit of $40,000, which would help you qualify for your own home at $200,000,
mhm.
assuming all the facts are in place, leaves you with a tax bill of $6,120 minimum. And then I'm going to take the same 40,000. I'm going to assume you're single because I want to buy the house myself. And so then I got, all right, so now that's approximately about 20, so about 18%. So I'm going to pay a total tax, ordinary income of about $4,968 and self-employment tax of $6,120. So that means I got to come up with $11,088 to pay. Oh, and this is just federal. I didn't even include on the state yet. The federal government, I'm going to hand them a check for $11,088 to qualify to buy a $200,000 home as a mortgage. This is the math. I mean, my little machine, right? This is what the machine is telling me. So you can find the golden ticket for the next mortgage when you shell out $11,088 first. That's the first hurdle they have to get over, right, Curtis?
Mhm. That's right.
So then, all right, cool. But depending on the entity choice, so now I'm talking to my C Corps and my S Corps, I just got to show a W-2 of at least $40,000 because you said income,
Mhm. Mhm.
right?
That's correct. Yes.
So I could, in theory, have zero income in my corporation
Mhm.
and have paid myself wages for 40,000,
Mhm.
and you look at my W-2, not my business income.
That's correct. Yep.
Damn, we are good, 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 good. On.
Yeah.
Just for
Yeah.
that, I'm gonna show one nip, right?
Ah.
So that's
Whew.
it, right? Like
You're
that's
hot.
the truth, right?
Mhm.
Yeah, see, you gotta been hot and bothered by that, but that's what we're talking about, right?
That's right. That's right. Yeah, I mean,
Holy
that's
shit!
like entity choice is super important. Obviously, like that knowledge of knowing what to do. I mean, taking the time to sit down and understand and learn. I mean, that's just going to make your life so much easier when you're going to go buy property. And what a shame it would be that if you're in a position to buy your own house and you can't do it because you didn't take the time to sit down and learn, that's going to be on you. You know, it's
Yeah.
like if you're starting a business, you're self-employed, you need to prioritize that. You need to learn about that kind of stuff.
Yeah, absolutely. Curtis, what's been the largest amount of money you've ever um handed out for someone to purchase property?
I mean, I don't think my numbers are too impressive, but I don't know.
Hey, listen, I mean, we can talk about size later.
I mean, I'll take a couple $1 million transactions. Like, I mean, But
I mean, that's amazing. I mean, because like, so my husband and I, we've been watching a show called Castle Hunters.
Mhm.
He found it on YouTube since a while back. Did you know they were buying castles in France and Europe for like $1 million? Like, I want to qualify for $1 million. Like, I want to go buy a castle. You know what I mean? So that's kind of cool. So okay, let me ask you the silly. So, oh wait, let me do the math. If if I need 40,000 to borrow 200,000, assuming all the facts are great,
Mhm.
then to borrow 2 million, I probably need about $400,000 in income,
Yeah, actually, I think that probably works out pretty close.
which actually isn't that's not scary when you think about it. I mean, of course, we're talking you got to have a lot of your ass has got to be so clean that when you go to wipe it, there's no streaks on it. I mean, that's really what we're talking about here, right? If you're going to qualify for 2 million, you might have one little streak on the underwear, but otherwise it's got to be pretty clean, right?
Yeah. Yeah, I think those people buying $2 million. I mean, most of those people have, obviously have great income coming in from their business. They got a lot of assets. I mean, yeah, they're usually in that category there.
Yeah, it makes sense because I mean, okay, honestly, this is what just went through my mind. $400,000 is all I mean, again, assuming everything plays out clean, right?
Yeah.
400, which is not impossible. That's the other thing I think I'm trying to say is it's not impossible, one, to make $400,000, right? It's not impossible.
Mm.
Number two, it's not impossible to have almost a quickie too, a squeaky clean type situation where you would qualify for $2 million to be lent to you.
I think so. Yeah, I don't think it's
I mean,
totally.
that's pretty freaking cool when you really think about that.
I
Like,
mean, if I could buy a castle in France for $2 million, like that sounds like a dream.
I know, right? I have a question. Speaking of France, um, do you guys? Does because you're a broker, which means you get to shop around to different underwriters who lend the money, right? That's part of being a broker, right?
That's absolutely right. Mhm.
Do you guys ever do deals where people are buying properties in foreign countries?
Ooh, that is a good question. I'm not in a position to do that right now, but I would imagine that there are some companies that have financial institutions they do business with overseas.
Interesting. We're gonna have a private conversation maybe because I'm a little bit curious. So let me share with the world. So as you all guys may or may not know, je parle français. C'est mon deuxième langue. It's my second language, and I just freaking love speaking French when I can. And my French family, I say my French family, it's a whole other long story for another episode, live there in southern France, city of Pau. And I go every 3 years or so and visit them, right? And so one day I was like, man, I really want to buy a house here. Like, I really would love to buy a piece of property in France, right? When you understand tax law, or when you understand the premise of how taxes work and how you separate yourself from your business and the types of entities and stuff, which I teach in my class, Rapid Tax Savings Formula, um, this is how I think. I could buy a house in France, but I'll turn it into a business asset, and then I will then rent it out to vacationers, right? People go and they vacation in France while I'm not there. Why not make it make money for me, right? And then turn it into a retreat center where I can bring my high-end clients with me to hang out and to learn with me more one-on-one, with more intimacy, with more knowledge for the higher level stuff that we've got to talk about that we
Mhm.
can't share here on the show.
Yeah, I really like that, Jonathan, because that's like building in multiple aspects of your life and bringing it into like one experience. So, I mean, shoot, the more we can do that, I think ultimately the more fulfilling that our work becomes. So I'm all if I can mimic that exactly and create exactly what you just described, I'm all for it.
We're going to help me out with that for sure. Now, I have a technical question. So, are you mitigated in terms of no? Are you regulated of where you can technically like practice mortgage brokering?
Absolutely, yeah. So I mean, it's regulated by state.
Okay.
So for every mortgage that we originate, we have to be licensed in that state. Um,
Mm.
and I think that's a fair practice. I think
I
what's
mean,
just
otherwise it would just be like dime a dozen. What states are you licensed to issue out mortgages?
Right now, we're in Arizona and in California, and we got Texas coming out probably
Ooh,
sometime this month.
ooh,
And yeah, I'm looking at the Southwest. Maybe New Mexico, maybe Nevada. So we're kind of going to stay in in the Southwest part of the country. But yeah, I
I love
mean,
it.
I think we're the best place to get a mortgage.
I love it. And if you've been watching since the start of this show, I have finally removed the pixelated filter so you can see how cute my guest is.
Oh wow, I'm glad. I need to get a hardwired connection there, Jonathan. Jeez.
So, Curtis, I want to ask you. So you've been in business for yourself. How long have you been in business for yourself?
Almost 3 years now.
All right, fantastic, fantastic. We've actually worked together way back in the day when before I rebranded and restruck a whole new way of doing business and everything. But when we worked together, did you enjoy that?
Yeah, Jonathan. Of course, of course. I mean, I'm always happy to meet people that I like your approach to what we do in your profession. I think it tends to be holistic. You're not just like you tend to be balanced in what you're doing, and I think that's why you and me connected and
Oh
resonated.
yeah.
Is I think we have a similar philosophy in how we run our business and how we run our profession and whatnot.
And I'll tell you guys right now, refinancing because both times. So the first time you helped me to refinance with the cash out, so because I could upgrade my kitchen and my bathrooms and everything. That first experience was probably the easiest and the quickest experience. Like it was the perfect date. Like it went without a hitch. Right now, I will say though that probably what made it easy is because I was able to get you the documents that you needed right away. Though, right?
Absolutely, yeah. I mean,
What are the common documents I should have in my folder to give to you before I have this conversation with you?
absolutely. I mean, if you're self-employed, if you're a business owner, definitely have your 2-year tax returns. And then if you have a corporation, I would have your business tax returns available as well. Bank statements, and that's generally it. I mean, if you got your tax, and that's the thing, it's like if you can get your people, I think they tend to, and tell me if I'm wrong here, Jonathan, but they tend to put off their taxes. Like it's kind of like that scary monster you don't want to look at, but
Yep.
you got to.
Yep.
That's the way that they are, but you gotta look them right in the face, and then you gotta manage it, and you gotta take care of it. And if you do that, when it comes to getting financing, and it's not just for me doing residential mortgages, getting people into houses, it could be for like, whenever you're going to qualify for a business loan or something like that, like something to grow your corporation, like whatever financial institution looks at your tax documents, you should know what they're looking for, and you should know why your taxes look the way that they do. And it's going to save you. It's going to make your life so much easier whenever you try to go get financing for anything.
It's interesting you said that because the tax return is kind of like the summary of your whole entire activities for the whole year,
Mm-hmm.
right? And then that's what we report. In fact, in my book, The ABCs of Deductions, An Entrepreneur's Guide to Tax Write-Offs, I talk about that, how, at the end of the year, Uncle Sam asks you, Curtis, so did you tell the world that you existed and that you're alive, right? Did you spend money on advertising? And you say, yes, I did. I spent money on advertising. And he's going to be like, cool. Now, instead of paying us $11,088 to make 40,000 to qualify for 200,000, right?
Mm-hmm.
He's going to be like, you're going to take some of that. You're going to take some of the advertising to be seen away from your tax bill, right? Like that's essentially what he's saying to us.
Mm-hmm.
I totally just lost my train of thought for some reason. I don't know what happened.
Well, I think the touch on where you were going with that, Jonathan, is that there are certain deductions that you should take if you're a business owner that we add back into your income for qualifying. So you're in this sweet spot where you're still getting the tax deductions, and then when you go to qualify for the loan, we're going to give you more income so that you can qualify for it. So yes, you need $40,000, but there's a way that where you could claim 20 and pay taxes on 20 and still get the 40,000 to qualify for your mortgage. And that's, I mean, that's
the magic.
Mm-hmm.
That's the magic. And
that.
listen, you want to know the magic, you got to come talk to us because we know the magic.
The magic it comes at a cost, I will say, but like for a cost of like it's like it takes so long to learn that and experience what it takes to come up with that magic, and that's I've been doing this for like I said since 2006,
Yeah,
so
like
I
me.
yeah, it's been
For
a
you,
long.
it's about 15 years. For
Yeah,
me, it's 17 years.
yeah, yeah.
Yeah. And it's, you know what? You brought up a good point. You brought up a very good point. And that is that it's our experience, our education, our knowledge for the last 17, 15 years, right? Between the two of us over here, right? That really allows us to, without, in fact, if you saw the show earlier, if you were watching it, I just grabbed the machine and I asked it what the tax bill, right? In my head, I saw all those calculations, right? But that's 17 years of experience doing that, right? Just like
Yeah.
with right now, when you were like, yeah, you need about 40,000 if you're going to qualify for 200, assuming everything's clean, right? Because knowledge and experience, and just because of that doesn't mean that we're cheap, doesn't mean that we're somehow going to be valued as less than. In fact, it's the opposite, because what you just shared was really important, and that is that I could go and learn about mortgages. I'm sure of it. I know I could probably go to university and get another degree in finance that emphasizes probably in mortgages or something. I go work for you and be an apprentice, right? Put in my time and learn how it works. I could totally do that.
Mhm.
But you know how old and gray I would be by the time I learned that to go buy my first house? I'd be dead probably, right? Just like with a lot of you who are like, I could do my own taxes. I know everything there is to know about my business. You sure can. You can go read publication 535, Small Business Expenses. You totally could go do that. You could totally go and read all of Title 26 of the United States tax law. You can go read all the tax court cases if you want to become an expert in filing your own taxes, right?
Mhm.
You'll be old and gray too by the time you do file your taxes to save some money, right?
Mhm.
Or you can take a shortcut and you can invest with experts like Curtis and like myself, who can get you to the end point within 30 days, or in my case, sometimes overnight. Am I right?
Yeah, absolutely. Absolutely, 100%. I mean, it like you mentioned, all those calculations that you do, or even know what to look for. It's like a business owner could come in and drop their documents on your desk, and you can take a look at them, and in 15 minutes assess and diagnose everything that's happening. It's the same thing with like a doctor or physician. It's like,
Yes.
an experienced physician you can come in there, they'll look you up and down, and they'll say, okay, you got this, and this wrong with you. As opposed to a new doctor or somebody that doesn't know as much, you're going to have to run all these tests. You're still not going to know what's wrong with you, and that's
It's
the value
true.
there. That's the
It
value.
really is true. And you know what? You still have to pay, if you're uninsured, you still have to pay that doctor visit, even if he was in there for 15 minutes, typically 150, $200, right? You still got to pay, right?
Absolutely.
Even if he knows what's wrong with you, right? By the way, fun joke. So my husband, he likes to pick on me, which is fun. It's just part of him being from New Jersey. You know who you are out there, you New Jerseyans. And so one day I thought I was having a heart attack, like legit. Like I started feeling like this part of my face going numb. I started feeling like my left side of my arm going numb. And so I really panicked, like I legit panicked. And so I drove my ass to the hospital because I really thought I was having a heart attack. And of course, it was just a big, huge anxiety attack, but whatever. And so we're back there. They're doing the test and everything, and blah blah blah. My husband, of course, drops what he's doing to join me at the hospital, right? And after they're just like, nope, it's just anxiety, man. Like you just gotta chill. So now the joke is anytime something feels weird, he always says to me, "Do we got to go to the emergency room?" Right? Like you like, do we have to go to the emergency room? But like in that case, right? It was kind of like I had some of the symptoms of what I thought was a heart attack, right? I'm not a doctor though. I'm not an expert. I wouldn't have known if it was a full-on hardcore heart attack. I didn't know, right?
Mhm.
So why would I sit here and pretend like I'm not having an issue and I got peace of mind? I went and got taken care of. It's like people who have, their businesses and their taxes, and it's the same thing. It's kind of like, I think I'm going to pay some taxes. I think I got things going on with my arm, right? They're their business. And then They wait to go to the emergency room, which is me, which is after the fact, and then they wonder why it's a bajillion dollars versus just one. Same thing with you, except it's the reverse. If they were aware of the fact that their arm was tingling, right, they can start talking to you before they go buy that house, so you can help them to make sure they qualify for the biggest amount of house they could possibly buy.
Absolutely. Yeah.
Same thing.
Yeah. Yeah. That's definitely right, Jonathan. It's like I just think about that. Like you wouldn't go and try to go to a cut rate doctor, right? It's like, oh, this doctor said I can get this, I'm going to get this procedure done for, just a little bit amount of money. And so, yeah, it's, I can't emphasize it enough, get the right professionals to advise you, sit down with them, vet them, ask them all the questions you need to. But I mean, I'm in the same position myself. If I need it, like, I don't file my own taxes. Like, I don't even do my own bookkeeping. Like, I don't trust myself with any of that. So it's like, I'm going to go to a professional to help me with that.
Absolutely. And it's interesting you say that, because the issue is, today I was talking to my visionary coach. So shout out to you, Patty. And we were talking about like the evolution of our businesses. And I always, in my class, Rapid Tech Savings Formula, I use the child analogy to explain our businesses. And I said, it's kind of like in the infant stage, it's you who's taking care of your child, right? You don't trust anybody to take care of that baby but you. I mean, this is a motherly instinct, I think, that just comes naturally, right? Like, no one touches my baby, right? And that makes sense. No one's going to touch my business because I'm doing it originally. But eventually, the baby grows up into a toddler, into a young child, right? Mm-hmm. And now you need to start reaching out to the outsourcing, right? So if we're rich enough to have nannies, right? Or we're wealthy enough to invest in private tutors and everything, that's like us at the capacity to hire the professionals to take full control, right? But here's the thing, because it's my baby, it grew up with me. I know what it needs. I know it needs to be fed between the hours of 1 and 2. It needs to be diaper changed every 30 minutes. Like, I know my kid. So when I hand my kid off to an expert, I'm able to say to them, you got to feed it this way. It's got to be changed this way. Like, right?
That's right.
It's no different. In your business is no different. It's the same thing. You got to take care of it. You got to do it yourself. You got to learn how to do your own books a little bit. You got to learn a little bit how to read your tax return so that you and Curtis can have an actual conversation. So you and I can have an actual conversation, right? And then you get to the level at which you can hand off the baby to somebody else.
That's right. That's right. And maybe in the beginning, while the baby's young, while your business is young, you're a little bit more hands-on. But as it grows, you're eventually going to need to hire some help to do that. And, there's a lot of, business owners, parents that are probably neglecting their children, and
yes.
They're not feeding them on time, and they're going to bed hungry, that kind of stuff. That's definitely happening. So, but that's a great analogy. That's a great analogy.
It's so true. Yeah, it's one of my many ways in which I teach. So with that, Curtis, can you believe it? We're coming up to 45 minutes. So we've got about 3 more minutes or so left, maybe a little bit less than that. So with that, today we talked about mortgages, and there's ways in which you can pay less taxes and still qualify for that dream house. We talked about a whole bunch of stuff, actually, now that I think about it. But Curtis, where can I go if I want to talk to you, if I want to get a hold of you? Do you have a number? Do you have an email address? What do you have?
Yeah, I would just recommend going on to the website, www.clarke-cap.com. You can fill out a quick form. We'll get in touch with you. If you need something for home purchase, refinance, is still a great time to refinance. And yeah, I mean, we are one of the fastest companies when it comes to doing the mortgages. So
he's speaking the truth, people. He is speaking the truth. I'm telling you, he refinanced my first mortgage with cash out, which I think took like 2 weeks, mainly because I had to be appraised and there's some other things that happened. And then the second time we redid it just simply for a lower interest rate. And it was done in like less than a week.
Yeah. It's like ridiculously fast. But, I would just strongly encourage that any business owner, like, if you are going to buy property, get in touch with myself or with Jonathan. Let them know what you're trying to do. That way we can advise you, make it a smooth process for you. And if you're a business owner, you're probably going to need that service at some point. So why not figure it out now?
That's exactly it. So, Curtis, what would be your last parting words? Well, you kind of did a little bit, but what would be like your last parting words of wisdom when it comes to business owners and qualifying for a loan?
Yeah. I would say, well, first, Jonathan, thanks for having me on the show here.
My pleasure.
But I would just recommend that understand what we're looking for when it comes to qualifying, so that we can do what you want, which is basically, at the end of the day, all business owners, they want to pay less in taxes and they want to have more income so that they can buy the house or the property that they want. And the wisest thing that I could recommend for you to do is to reach out to a professional. Don't call up Quicken Loans. They're not going to know what to tell you when it comes to self-employed income. You do need a professional. This is something that's like highly, it could be highly varied and diverse and complex. And if that person hasn't devoted themselves to learning that craft, you're not going to get the right answer, and you're going to waste a lot of time and money. So the wisest thing you could do is to trust and hire a professional to do it. Whether it's me or somebody else, that's up to you. But I highly recommend that you work with somebody to help you with that.
I totally 100% concur. And then I'm going to flip the script and I'm going to say the following: work with a mortgage broker who understands the complexity of the self-employed and trying to qualify for a loan. Because I've actually tried working with other mortgage brokers and they don't understand. They just simply say to the client, nope, can't help you. And working with Curtis proactively together as a team, we can make sure that you do get the qualification that you need so that you can buy the rental properties you want, buy the castles that you want, buy the dream home that you want. So without much further ado, I want to say thank you so much to you, Curtis, for being here a guest and gracing me with your cuteness and your smartness. And I'd also like to say thank you to all of my viewers who watch my show right now live and, of course, post-production. If you want to find out more about the things you can deduct in your business, check out my book, The ABCs of Deductions, An Entrepreneur's Guide to Tax Write-Offs. It's on Amazon.com right now for sale. I also put in the link here for registering for my class, Rapid Tax Savings Formula. It starts this Monday at 6 p.m. Mountain Standard Time. It goes for 5 weeks, and we walk you through what I call my SEED method, which is the profit mindset, separation of self, entity choice, advanced deductions, and ultimately documentation. And then I throw in a free, amazing bonus that you're going to have to go check out the link for to get it. And that's really all I've got for today. So thank you so much for everybody for watching. Curtis, thank you so much for being a guest. Look at him. He's finally getting comfortable 48 minutes later.
All right, here we go.
Yeah. Yes, I did it.
Okay.
Yes. Oh my God. You know what? Now you gave me something to put on my marketing material. You have to stay to the end. All right, guys. Well, thank you so much. If you need to get a hold of somebody who understands business and mortgages, because the two go hand in hand because of that double-edged sword, got to reach out to Curtis here. He serves California and Arizona right now, officially, right?
That's right.
And moving into Texas, hopefully down the road, followed by New Mexico, Colorado, basically the Southwest. So with that, I'm Jonathan Bengal here, host of Naked Tax Talk. Until next time, just remember, it's con mucho, mucho, mucho dinero. Until then,